Good afternoon, everyone. My name is Rich Swerbinsky with Onward and Upward Consulting, and this is The Big Picture, presented and sponsored by our great friends and partners at Depth. Nearly 2 decades, fintech trailblazer Carrie Milam, her outstanding EVPs, Leslie Colley and Lindsay Neal, ably helping companies tell their story, helping fintechs tell their story in the mortgage space. If you need your story told better, need help with strategic communication, brand management, public relations work, check out the Depth PR team at depthpr.com or get a hold of Rob or I. We will gladly connect you with the fine folks at Depth. So there we have it. And as always, join my esteemed colleague and co-host, Rob Chrisman. Rob, great to see you. Where are you at and how are things?
I'm in the little town of Napa, California, and things are good. It's probably I just got back from a bike ride, 60 degrees out there. It's nice. I'm sure it's, what is it where you are, 16 degrees?
16 and snowing. And as I noted to you guys pre-show, my hot water heater died last night. So I'm sitting here freezing, the space heater like an inch from me. And just waiting for somebody to bring over a water heater and install it tonight. So welcome to Cleveland.
Do you need a new one or can some part be replaced?
It's 16 years old and they last like 12 years. So it would have been like 500 to replace it and 1,800 there, 500 to fix it, 1,800 to replace it. So it's just bite the bullet. So there you go.
Yeah.
This week, our special guest, really, really pleased to be joined by the co-founder and CEO of Vesta, one of the new LOS products out in the market. It is Mike Yu. Mike, thanks for joining us. Really glad to have you on the show today. Looking forward to the convo.
Yeah, thanks for having me.
Awesome. And tell our listeners, our viewers, a little bit more about Vesta.
Yeah, so at Vesta, we've built kind of the newest, most modern and AI native LOS on the market. We started the company 5 years ago, so in 2020, have been fortunate enough to work with some really great partners and customers. Notably, of course, we'll talk later about PennyMac, who announced in September that they have started their conversion to our platform and have, really been ramping volume pretty nicely. Really so much of the thesis is about there's a lot of people involved in mortgage manufacturing today. And I think that every single executive who runs a lender would like those people to be a lot more efficient and would like to, get loans closed faster and cheaper. And we really believed when we started the company that the only way to drive that cost down was you had to re-architect the entire data platform, you had to re-architect the workflow, and you basically had to build a new LOS. And so it takes a really long time. It's definitely been, not an overnight success, like 5 years of hard work, and there's definitely another 5 to 10 in front of us. But been really exciting to kind of feel the reception we've been getting from the industry and some of the early wins.
I love it. Trust the process and exciting momentum as of late, and looking forward to getting into all that and more here on the show today, Mike. And Rob, we always get started with the big picture on the show, and as usual, no shortage of items to sift through here. Just before the show, the Government Accountability Office formally announced they're launching a probe into Bill Pulte. Of course, the grand jury probe already underway. Has some lawsuits, more probes than a NASA mission for Pulte right now, but we'll see how that all plays out. Trump official did send, they made a comment immediately after the probe was announced that defending Pulte, saying he was one of their most loyal advisors. So interesting there. Rohit Chopra back in the game, Rob, inking a deal with a consortium of blue states to help them understand how to implement some of the regulation that maybe has been taken away with the CFPB being wiped off the planet. Howard Lutnick, Rob, notes yesterday in an interview, Fannie Freddie IPO sooner rather than later. It seems like, we keep going back and forth on this, and no real news of note outside of teasing it. And then lastly, Rob, maybe one of my favorite news stories of the year, Matt Ishbia backs the 50-year fixed rate mortgage. I mean, I'll leave it there for now because that's a lot to leave you with. But as always, Let's see how you
All
guys.
All right. I'm gonna defend Matt. What I listened to it twice, and what Matt was, and Matt is a Bill Pulte fan. What Matt was promoting was the fact that the government leaders are talking about trying to help affordability. And toward the end of his tirade, it's not a tirade, more like a missive, dissertation, whatever. He says, hey, whether it's a 50-year mortgage or a portable mortgage or an assumable mortgage, at least the leaders are talking about ways of making homeownership more affordable. And that's what he's out there promoting. The 50-year mortgage, I mean, we could beat it to death even more. The interest rate, a lot of the discussions about a 50-year mortgage don't talk about how with the interest rate bump from a 30-year to a 50-year. Mike mentioned earlier about, does the government want to subsidize a 50-year mortgage? Well, first of all, 50-year mortgage is going to be non-QM. Not that QM and non-QM is written in stone, but it's a non-QM mortgage at this point. And Rich, as you brought up, Fannie Mae, Freddie Mac, a re-IPO, as it were, that really doesn't lend itself to supporting oddball mortgage maturities. So I think the 50-year mortgage is kind of dead in the water. But like Matt said, at least the government is talking about things like that. So, good for the government. Regarding Rohit, I oftentimes wonder what happens to some of these government people or even non-government people who are in the limelight for a while, and then they're out, and then they're not. Richard Cordray, Rohit. What's Ben Bernanke doing these days? What about? I mean, the list goes on. Kamala Harris. I mean, what's still alive?
I think Greenspan just turned 100, and he's still alive.
Is Greenspan 100?
Yes, it's unbelievable. He looked like he was on the brink of death 30 years ago.
Yeah. Back when the market wondered what color briefcase he was walking up the steps with, and what that would how that would influence interest rates. So, yeah, I wrote about 100-year birthdays earlier this week because we've got Dick Van Dyke coming up, and Mel Brooks is next summer. So, good for them. Good for them. I didn't know he turned 100. I wish I'd known that. I'll have to put that in. But yeah, I think that, we did take a little bit of a break in the news cycle, given that it was Thanksgiving. There's not a lot going on, Wednesday afternoon, Thursday, Friday, over the weekend. Somebody told me this morning or yesterday that Bill Pulte has not tweeted for.
He just tweeted.
Days?
Like an hour ago.
He did.
Something about FICO 10T should be out in a few weeks. And then he retweeted something else about, Fannie Freddie being open to new sources of FICO scores. So it was like a FICO Pro tweet and then a Vantage Score Pro tweet. So it seems like somebody's cleaned up his game a little bit, maybe.
Well, the informal behind the scenes word, and I won't reveal my sources, but was that after he announced this 50-year mortgage proposal, President Trump walked that back, and they told Bill to cool it for a while. Mm-hmm. So again, I think it's been up until whatever he just tweeted. I guess it had been a couple of weeks or more than a couple of weeks before he said something. So
yeah. I'm generally pro this administration, but when Trump is telling you got to stop tweeting, I mean, that doesn't seem to be a good sign.
Right. Yeah. That's something. That's something. But yeah, there's things going on. I don't know. We're heading into December. We're in December. Things do tend to quiet down to some extent. I think every once in a while somebody will talk about it. A re-IPO of Fannie Mae and Freddie Mac. And as you and I have talked about, you or I or Mike or anybody can go out and buy stock in Fannie and Freddie right now. But the financial arrangements that are in place with the government with regards to the warrants and the structure of the agreement just really preclude any kind of easy solution to some kind of release from conservatorship. So, maybe there's a school of thought that, Bill Ackman was out recently talking about, well, let's just kind of put them back on the New York Stock Exchange and let them sit there for a while. I don't know. We'll see. But, I don't know if anything's come up lately, Rich and Mike, that we haven't been talking about for months, if not years, if there's really anything new out there. So meanwhile, you've got, LOS providers like Vesta and lenders just trying to help borrowers. And I think heading into the holidays, that's what they're trying to do.
Mike, any thoughts on any of this madness before we start talking tech?
The one thing I'll say about Rob's defensive Matt is like it kind of undermines the defense of, oh, at least they're talking about it when Trump has to walk back the one thing you said right after you did it. So I don't know, man. We could have done that one better.
Yeah, and I'm talking about ideas, and I am so all for that. Just ideas that at least have some semblance of maybe making sense. But
I think the fact so Mike, you probably don't tune in every week, but Rich is vehemently anti Matt Ishbia, and Matt and I have a love-hate relationship. I could shoot him a text or send him an email, and he'd write back right away, and we'd banter. And he said some not great things about me in the past, and he's also said some great things about me. So we have this volatile relationship. But I'll give him the benefit of the doubt on this one to some extent. But you're right. I mean, President Trump did when he was talking to a bunch of Republicans later that day, I think after this 50-year news broke, he said it's not a big deal. And I think, like I said, sources tell me that he's told Bill Pulte to cool it for a bit.
There you go.
Yeah, it undermines the cause,
Yeah. True.
Well, on to rosier landscapes. Vesta, the origin.
Hang on, Rich. Hang on.
Mm-hmm.
I need to ask Mike something. 4 years at Stanford. Were you involved in mortgages at all while in college?
So I was not involved in mortgages before I worked at Blend. Actually, there is a funny story about I grew up outside Detroit, and I went to high school. In high school, I was pretty good friends with Dan Gilbert's nephew, actually.
Oh, interesting.
And the summer after high school, we all graduated, and Brandon, the nephew, was like, we're all going to apply for internships at Rocket. And of course, he's Dan's nephew. Everyone in the friend group gets an internship at Rocket, roughly speaking. Like we played, Frisbee together on Saturdays, whatever. Except I waited 3 weeks to look at some other things, and then I applied. So by the time I applied, they were full, and I did not get the internship at Rocket. So I had never done anything in mortgage until Blend. But I did start at Blend my senior year of college. So there's a little bit of overlap in that question.
Were you playing online poker with Nima, making millions in college?
I was not. Unfortunately, by the time I was in college, I think they had done the whole crackdown on online poker, and you couldn't.
For those listening, the founder of Blend, where Mike was before, and I've heard him tell this story before, how he made a bunch of money playing poker, right, at Stanford. Isn't that the kind of the story? So,
yeah, it used to be that you could play poker online in this country, and I think now it's very legalized, and they're bringing it back with sports gambling. At the time, I think it was a little bit gray, but everyone kind of just did it. And Nima really cornered if you were really good at math back in the mid 2000s, you played heads up limit poker. And it was actually a mathematically solved game, and Nima is obviously brilliant, and so he was just crushing it, I think. But now that game is mostly solved by computers. You can't make any money playing it online, and of course, there was the whole late 2000s, 2010-ish incident called, I think, Black Friday or something like that, where the FBI just went in on all the online poker sites, took them all down. It was the whole thing.
Interesting. Rob, any Stanford follow-up questions? I interjected there. Sorry.
No, just it's always interesting to find out how people go into mortgage banking, or how they go to work for a third-party provider, or in this case, create a third-party provider where they saw a need. And it's hard. It would be like, Rich, you starting a plumbing supply company because you had your hot water heater replaced, but you saw a need for something that wasn't being satisfied in the plumbing industry. So you said, I'm going to start that business. So, without having any plumbing experience whatsoever. So I was curious about Mike and what kind of mortgage experience he had to start this up.
Yeah, I mean, mortgage is an interesting creature. Like everyone you ever talk to in this space is like they all mostly get in by accident, except I guess like your son, Rob.
Yeah, yeah, some, fair amount of it is family driven. Other times it's, you go to work for a bank and you're in the teller program or something, and you get bored being a teller, and they say, "Oh, you got an opening in mortgage," and you say, "How do you spell mortgage?" And so you end up like for 30 years in mortgage, working for the bank. And so it is interesting. It's an interesting business because hundreds of thousands of people are in it, but it's not like on the tip of the tongue of the general public until it comes time to buy a home or to, because you need to put in a new kitchen and you need to pull some equity out or whatever it might be. But it's a great business. And just ask anybody in it. It's a really, really good business.
Cool. Mike, the Vesta origin story. You have to take us back 5 years ago. You decide to make the leap and start your own LOS from scratch. What inspired you to do it? How terrifying was the leap? You were young as hell at the time, right? I mean, take us back in time and into your mindset 5 years ago.
Yeah. So 5 years ago, I was pretty young. I left Blend in August of 2020. So I was 25.
How old are you right now?
I'm 30.
30. Okay, cool.
So I was 25 at the time. Obviously it's kind of a big, scary thing to start your own company. My mom jokes, I don't think she was joking actually, that she didn't sleep for like 3 months after I quit my, pretty nice job at Blend to go and like see about figuring something out on my own. I was very fortunate. I had an amazing partner, Devin, who I had worked with for 4 years at Blend. He had worked at Blend for 4 years before I even got there. So phenomenal engineer, phenomenal technical architect, phenomenal leader of engineers as well. And we decided that, it was time to go start a company. This is a very natural, like Silicon Valley journey almost. It's like you help build a startup and then you decide you want to take a crack at it yourself. And I think that we wanted to explore a bunch of things, but I think it was pretty clear to us that the mortgage space had a lot of opportunities for technology. It was also, if you look at the landscape in 2020, it was the kind of landscape where as a technologist starting a new company, everyone was kind of going into the niches. Like fintech was very big, vertical software was very big. People were building like plumbing software to Rich's hot water comment, and all of these various niches. And I think that it was like the logical thing to do. We knew the market really well. I had the great fortunate blend of working with some amazing customers and meeting a lot of their executives. And so I had heard a lot of complaints over, my 4 years about LOSs, about how they were, obviously everyone complains about latency, about things like stability, but also about things like the lack of innovation and competition in the space. And so it generally felt like there was appetite for somebody to take a crack at a new LOS. At the same time, in 2019, when I was at Blend, you'll remember there was like the small rate hike before COVID, margins started to compress. All these lenders were worried about, especially the IMBs, they were making, roughly $0 a loan, which, now in like 22, 23, 24 was absolutely the norm. But in 2019 was the first time in a while that it happened. And everyone was worried about manufacturing cost and operational cost. And I think that also seemed like a very natural opportunity, which was like, can we do something that will help lenders realize operational efficiency, reduce the amount of money they're spending on processors, underwriters, closures, make those people more efficient, et cetera. And I think a lot of the original thesis of Vesta was people want a new LOS. All those people do all their work in the LOS. And really the way to make those people more efficient or automate parts of the process or whatnot is you have to own that entire workflow. And so all of that combined was, let's build an LOS. If you look at like the fundamentals of the mortgage space, it is all really data and rules. And so why have we been unable to really achieve meaningful efficiency and cost improvement and automation in, a decade of technologists throwing stuff at it? We concluded, I think at this point, proving out correctly, but, still the jury is out, that the problem was you had to go all the way down to the data architecture layer and re-architect the database and basically build something that wasn't flat file, that wasn't single lock, so only one person would be in the file at a time, or not even one person, like one system can modify that file at a time. And really re-architect something that was, relational and much more transactional. And if you redid the database, you could build this amazing workflow layer on top. You could drive, the process towards something that's task-based and defined by a system. And then you could drive a lot of operational efficiency and automation. And then, of course, in 22 and 23, you get this amazing AI wave, which you can then capitalize on to drive even more automation. But that would kind of be like the origin story back in 2020. It was really like lenders really complained to us all the time at Blend. And then there was this clear efficiency story where we kind of built this narrative in our own heads that I think is right, that you have to just re-architect the database to get real automation and efficiency in the space.
So, Mike, I've got a question that as an analogy, whenever I'm talking to the owner of a restaurant, whether it's some bar and grill or somebody I just happen to meet who owns a restaurant, oftentimes I will ask them, how do you know how to set the price of a hamburger? How do you know how to set the price of a Caesar salad or a martini? How do you do that? And they're interesting answers. When you're creating an LOS, how do you set the price for that product?
Yeah, fortunately, it's actually a very hard question. The model is pretty established, right? Like basically everyone in this industry prices per funded loan. And for the most part, that's how lenders want to pay. Like lenders always want to variabilize their costs because the market is cyclical and they, as much as possible, want a partner who will eat some of that risk with them. So that's the easy part. Then the question is like, where do you benchmark it? Of course, our point of view is that we should be building a product that is absolutely premium, that is like better than everything on the market. Because if it's not, and it's not worth more than everything on the market, nobody should switch. Like switching is a pain. You're looking at 6 to 12 months minimum. You're looking at a lot of brain damage. And so you have to be switching to something much better. And so you should be able to price at some premium. At the same time, in the very early days, you're asking people to kind of take a risk. Our very first customer, nobody was doing loans on the LOS yet. And so you've got to kind of incentivize them and make it an attractive deal for them to make that work. And so I would say we started, mostly by looking at the other players in the market for reference and saying, we'll price somewhere around the middle of those players while we are still proving ourselves and asking lenders to take a bunch of risk. We very much believe we've built the best product in the market. We are seeing, we're driving great efficiencies for a bunch of our customers. And so I think, and those efficiencies, are measured in the like high hundreds or thousands of dollars in manual labor, as opposed to, the low hundreds of dollars that people are typically spending on LOSs. And so we've definitely seen the price point kind of creeping up over the last couple of years. And honestly, it's kind of like we just continue to, as we sign up new clients, we quote them prices that like are a little bit higher each time. And we wait until somebody says like, hey, this is like way out of market. No one has actually said that yet. I think we're like not that aggressive. I'm a bad negotiator, I will say. So Rich mentioned, that he saw that we had hired a new head of revenue who started on Monday. And I'm really counting on him to help me figure some of that out, because probably most people would say, like my board would certainly say I've been very customer friendly historically. Like negotiation is not my strong suit, but it's per funded loan. And then it's really like we started around the middle of the pack. And I would say by now we're more in the premium tier, just as we've been able to prove out more and more of the product.
Thank you.
And you brought it up, Mike. I'll ask to follow up. Your new CRO just announced it, Joe Russo. He was in the mortgage industry, but coming from a tangential industry. Talk a little bit about Joe and why you picked him.
Yeah, I mean, when you think about the business we're in, it's really hard. Like you really need a wizard of sales who's going to figure out like, how to build a team, how to do the sales themselves, et cetera. And it's a big system of record. It is a huge ask of the customer. You're not just selling a platform, you're selling a partnership and like the culture of the company. And so you really need someone who embodies those values. And mortgage, as we all know, is like a pretty difficult space to learn. It's very well connected. It's relatively tight. And so finding somebody who really hit like the full bingo card of like, they have some mortgage experience, they have some connections, they know enough to be dangerous. And of course, there's going to be a lot to learn. And they've done this like very complicated system of record sale where you're selling like the most important thing that a customer uses. And before this, he was at this company called Functional Finance, which was selling basically a replacement for not full Guidewire replacement, but modules of Guidewire in like the insurance MGA space. And that is one of those like very deep multi-year, deep partnership sales. And then he originally, maybe 5 or 6 years ago, was at Ocrolus, where I think he really led a lot of their charge into the mortgage space. I think they were not necessarily in mortgage before he joined. And so that combination was just like really powerful for us of having the experience of, and the other thing, by the way, about doing system of record sales, because lots of people say like mortgage, doing a complicated system of record sale. Well, there are a bunch of companies that do that, notably ICE, like you could hire someone from there. I think the thing that is harder as well is you have to recognize when you're in my position that you're doing a challenger sale, that you're selling the new thing that not everyone has heard of, that is not the default. And that is actually just fundamentally a very different sale and a much higher burden of proof than selling, like an Encompass or MSP. And so Functional Finance is one of those great things where they were taking on Guidewire, and he was doing that complicated system of record challenger sale. He has the mortgage experience, and he's honestly just like a really smart guy. Like I think a lot of my friends in the industry would say that like it's pretty on brand that I hired like an NYU educated lawyer who went to an Ivy League for undergrad to be like my head of sales and head of revenue. And so all of that combined, I think, the first time we met him, it was just really clear that we had good values alignment and that he kind of had the skills.
This is The Big Picture, presented and sponsored by our great friends and partners at Depth. brand management, strategic communication, public relations. If you're a fintech that needs your story told or told better, deppr.com. Mike, the integrations and systems like talking to each other, part of the mortgage industry, really been as a hot disaster, forever, really. Big part of the, increased cost to originate, and being honest, a lot of that is one LOS having 2/3 market share and being able to gatekeep and paywall. And, so I love it seeing companies like yours emerge. Being honest, up until recently, they haven't had a lot of viable competition, but your platform, kind of the hallmark of it, is this, cloud native open architecture system. Talk about that a little bit for maybe the lay person in the audience.
Yeah, one way to think about it maybe is like when you look at some of the incumbents and all of their integrations, it's like 300 or 400 integrations built up over 20 years. You can imagine like software evolves, it lives and breathes, the regulations change, for goodness sake, like the standards change. And so over time, all these integrations, especially because there's so many different patterns, they accumulate almost these little like technical gremlins, like all these little problems that are annoying, and they feel like they should not be a big deal in isolation, so no one ever fixes them. But like over 2 decades, you accumulate a lot of these, and then you hear from lenders all the time, like this integration doesn't work, this other integration doesn't work. Every single time I push the data from my LOS to my appraisal order management system, I have to log into the order management system and fill in these 3 things, all of those kinds of little problems. And I think that it was really clear to us that a lot of that was, starting fresh is a big opportunity. A lot of that is standardizing the patterns. And so being able to say, hey, we have a standard interface and API, which is, how we're going to work with every pricing engine. We have a standard interface and API, which is like every point of sale can build on top of us in that way. We also have a bunch of lenders who have built proprietary points of sale on top of us because we have the open architecture and ecosystem. And so in many ways, we think of like the role of a new platform in this industry to lower the barrier for entry for a fintech or for a lender who wants to build their own technology, or for, like some unique solutions in the space. And so really having like that standardized set of APIs that we maintain really well, that we make sure we document really well and are really predictable. And then that, partners, whether they're innovative fintechs or, classic incumbents or lenders themselves, can really go ahead and build really powerful integrations where they get access to all their own data as a lender, which is one of those things that always drove me nuts, which is like, the data belongs to the lender for sure. Like no one would ever claim that I or ICE or, Lending QB or Meridian Link or whoever like owns the data inside the LOS. Like obviously it's the consumer's data that they have entrusted to the lender for a permissible purpose. And so being able to give that access to the data, but not just the data, but also like the workflows and the tools and the capabilities of the LOS so that another system can use them, that standardization and that kind of single platform definitely I would say has been a huge driver of efficiency for our customers, of frankly just like user happiness for our customers, where they're not like wrestling all the time with every other piece of software that they have. And so that I would say has been fundamental to our technical approach. And the nice thing is when you build a platform in 2020, it's easy to do that right the first time. It's much harder to go and like retrofit something that you've had for 2 decades into that clean, standardized, very well architected, stateless set of APIs.
So Mike, consumer data is a big topic out there, privacy, hacking, and so forth. Do your clients, or if a client is thinking about using Vesta, is that a topic that you've seen time after time after time them express concern about, or is it just kind of an afterthought?
So I wish I had a better answer for you, which is I wish my answer was they are super hardcore about it and they look every time. And I will tell you, sometimes I get in the sales cycle and they're like, all right, we're ready to sign. And I say, no, you need to get your chief security officer or whatever, like CISO, on the phone with mine so that you can do a security audit of our architecture. And they're like, oh yeah, we should probably do that. Which, really, I would, and, this varies, of course, like a lot of the more mid-market IMBs are more like that. Of course, the biggest players, you can imagine, PennyMac puts you through like hours and hours and hours of architecture review and like threat modeling and all this kind of stuff because they're a big publicly traded company where cyber risk is definitely a thing that like goes into their 10Q or whatever every quarter. And so it's like a whole thing. But unfortunately, I would say that in a lot of the mid-market, it just like they haven't been as rigorous as I would like as a consumer who like, thinks about like where my data is flying all around. And I think that that's because it's expensive and it's hard. Like security is really, really difficult. Unfortunately, the reality is like if as a consumer you want your data to be secure, every single place you give it to has to be like perfect. Whereas like the attacker only has to find like one opening, and those openings mostly do exist. So yeah, I would say that it has been a big focus of ours. It always was going to have to be a big focus of ours. Like we were, Devin and I were at Blend in the early days. We did the security audit. Like Blend was one of the first vendors that took Wells Fargo to the cloud. And so the level of security diligence that you had to do to go through that, they'd be like, can we visit your data center? And we were like, no, because we don't know where it is. Because part of the point is like AWS, tell you where the data center is. And so we always took that extremely seriously from day one. And if again, very similar to the API comment, if you design your software from day one with a bunch of these constraints in mind, you can get very, very far and you get a lot of kind of leverage and efficiency. But to your question about lenders, I would say it's definitely been very mixed. And of course, the biggest players are going to be extremely security conscious. In the mid-market, I think we see a lot more kind of willingness to, or not even willingness, just like kind of forgetfulness around like, this is a really important part of the diligence process.
Yeah, I often hear these stories about when a company gets hacked or when a hacker gets in trouble. Boy, if they had spent the energy and time and effort into, that they spent on trying to get into a company's system, if they had spent that for good purposes, the world would certainly be, a better place. But, the money, I guess, is too alluring. So thank you for that explanation.
Although it gets less alluring every year because like, I'm sure that the price of a social security number on the dark web is like, it's got to be falling by 50% every year, right? Like I just assume mine is out there. It seems pretty hard to keep it safe given all of the breaches that have happened in the last couple of years.
I have riches right here, so let me know if you need that.
Mike, the PennyMac partnership, you alluded to it. It was, I think, a few months ago where, big news. They selected you as their LOS and made a sizable investment in Vesta. So great validation for what you've done. You've noted big public company. That doesn't happen if you're not ready for prime time. Talk about how that all went down and what that means for your company here going forward.
Yeah. So when we started Vesta, I think we very much kind of had a pretty like blend lensed view of the market, which was there are, most of the volume that gets originated in this country is done by like the top 500 or so lenders, like the vast majority. And all those guys know each other, right? They all like go to the same conferences. They all are buddies. They trade jobs, and there's this nice musical chairs in the industry that happens. They go lobby on Capitol Hill together. Like they get together at MBA, all these things. And so at Blend, of course, the big breakthrough was like we launched Wells Fargo and US Bank, and that was kind of the validation. And everyone was like, well, we respect those guys. We know them. They're saying great things. We're going to go try this thing. And we very much felt that like the right way to build a new LOS and take that to market was to do the same thing. And so for us, of course, we were very fortunate to find some early partners who were smaller, who we were able to iterate with and really build a great product with. And then it was very clear, even from like 2020, 2021, Devin and I were very clear-eyed that we had to go and find a big top 10 player to take live on the platform and really start that effect. Of course, you want to be really diligent about the partner that you pick there. I often say, that in the Blend Roostify wars of like 2016, a big difference was that Blend had Wells Fargo and Roostify had Chase. Yeah. And frankly, one of those banks was just like much easier to work with and like supported the success of the vendor much more than the other. And so it's really important that you find a partner who is strategically aligned, who is really good at actually executing technology and implementation projects, et cetera. And so for us, I think, PennyMac was always the dream choice. But we obviously went through a lot of trouble to like go and get to know the leading execs at a bunch of the big IMBs. Really have been fortunate to build an amazing relationship myself with Doug and David over the last 3.5 years at this point. And so we started these conversations with PennyMac in 2022. Of course, there were a few things that really worked in our favor there. One is that PennyMac was already like a big believer that the workflow had to be task-based. They had built some of their own stuff around this. And so our vision of, hey, if you redo the data architecture, you can build this amazing workflow layer that's going to drive a lot of the process and drive a lot of efficiency, was something that they kind of like bought into and understood immediately. Of course, when you're, a $10 billion enterprise looking at moving your mortgage origination platform to this other thing, like it has to work. Like you can't kind of pick somebody and have them fail and all this stuff. And so, of course, there was a very long diligence process of like the Vesta team, how do we think about technology, how our architecture works, what our product roadmap looked like, and how we were making progress against that roadmap. And so it was almost like a 2-year process, I would say, of really getting to know each other, spending time with, Doug especially, but David and Jim and the guys over there, them vetting the technology, them seeing really how it evolved, not just seeing like the demo at the point in time in 2022, but also like getting the regular updates and seeing what the progress we were making, and really, I think, building belief that we knew what we were doing was kind of like a good way to think of it. And the other big thing for them, where I think I mentioned, of course, you need the competence in that team. And of course, PennyMac is an incredibly smart company. They're incredibly good at technology and kind of like implementing software inside the organization, which, the team over there has done an amazing job getting Vesta implemented alongside my team, obviously. And then there's kind of like the strategic rationale and the alignment, which is, if you think about PennyMac as a organization, they're the biggest correspondent in the country. They, more than almost any other player in the entire ecosystem, benefit from there being lots of small to mid-sized IMBs out there, because that's their bread and butter. Those are their core customers, and they really want those small and mid-sized IMBs to be successful. And so for them, a big part of the investment thesis was actually, it is very important to them that somebody comes along in this industry as a technology vendor and lowers the cost to originate for those small to medium IMBs. Because if they don't, those small to medium IMBs are going to have a hard time competing with the Rockets and the Zillows and the UWMs of the world. They're going to have a hard time staying, in business and viable. You're going to see consolidation. And consolidation is actually really bad for PennyMac, because that hurts kind of the lifeblood of their business, which is that correspondent base. And so in addition to the short term, like, hey, we will deploy Vesta at PennyMac, they will get this amazing benefit of our task-based system driving their operational efficiency, where they've seen some pretty amazing gains. They also saw the strategic rationale in the big picture, which is 5 years from now, 10 years from now, it is important to us as PennyMac that there's a technology like this out there in the ecosystem, because that's going to be what makes our correspondent successful. And that's going to be what makes us ultimately successful. And so I think that long-term vision was also like something that Doug and I talked a lot about, that he was really bought into, and that I think is like a very strategic of them. And so between all those things that came together in 2024, we obviously spent, 18 months getting to know each other, another 6 months negotiating deal terms, as you'd expect. To Rob's question about like, how do you price the thing? It's like, how do you price the thing when it's like a one-on-one negotiation with the second or third biggest originator in the country? Is a very like scary thing. And as I said, I'm not good at negotiation. But after about 6 months of kind of conversation about that, we eventually struck a deal in early 24. And then we had agreed that we kind of would announce it after we had implemented. Because of course, there's still a lot of work to do in implementation. LS implementations are very complicated and very difficult. We did pick PennyMac because we thought they would be one of the best at actually getting the software rolled out. We also had to prove to ourselves that we were going to be good enough at getting the software rolled out. And so we took them live. They did their first loans in mid-August, and we announced together in September.
Interesting. Yeah, that's interesting. Right. Yeah, didn't know a lot of that, and interesting how that all came together. Yeah, thanks for sharing that. So, the competitive landscape, Mike, and I guess I'll give my, it was, I think before the Encompass and Black Knight thing, I felt like Encompass was losing some traction, and then that kind of put everything on ice for like 18 months, no pun intended. And then the market has just been tough for lenders. Many lender friends of mine that would love to get off Encompass, but don't have the will or the cash or the implementation team. Now, how do you view the competitive landscape now? Obviously, ICE is the big 800-pound gorilla. There's you and a couple other intriguing new players, some of the legacy systems that have been out there nipping at ICE's heels. How do you view all that right now?
Yeah, to be honest, I really think about ICE like as the most important competitor here, right? It's like they have 2/3 of the market. At the end of the day, I always say like the other startups can all beat each other and lose to ICE, and like none of them will be happy. And if two startups beat ICE and split the market, like I think both would be happy. And so it really is, in many ways, like the competition is, it's just you see ICE in every deal. Most of the customers you take are from ICE, and so that's a competition you really, I think, end up spending a lot of time thinking about. I mean, ultimately, of course, you can always get the Silicon Valley line of like you should worry more about customers than competitors, which is of course true, and like that would be where I spend most of my energy. Lots of people do like to ask me about like, oh, are there other startup LOSs that you think are interesting? I think there are lots of great teams. I do think that the reality is building an LOS that actually originates a loan was much harder than I thought it was. Honestly, like we started in November 2020, and we were like, we're going to have an LOS that originates loans in a year. We did not have one in a year. We underestimated it by a factor of 2. We did our first loan in December 2022. And so people often ask me about, lots of people I think are intrigued by the space. Lots of people look at it and they see not a lot of competition, and they see a lot of opportunity and a lot of lenders, a lot of the things I said we saw at Lend. I often say that like I think these startups are often very interesting. They have interesting lenses on the market. my normal view is like until they've actually funded a loan that is sold and like not like brokered a loan, like really funded a loan with the customer, I typically say like I'm not going to worry too much about exactly what they're doing until they get there. And so I think most of the startups still need to hit that milestone. And for us, it really is all about, can we overtake, the big player on the block and build, a company that really enables, to my comment about PennyMac, like hundreds and hundreds of IMBs to realize the operational efficiencies that they're going to need to compete.
Like AI inside the LOS, like where does it belong to reside? Where does it reside in Vesta? I know you guys, one of your things, right, is explainable AI, where it's giving you the decision and it's giving you the mindset behind why it made the decision. Do I have that right?
Yeah. So one of the nice things about like the new models is you can literally just ask the model, why did you do that? And it'll tell you, which is like, once upon a time to do like explainable AI, there were all these startups actually in like 2020 that basically, because they were like not language models, it's like some convolutional neural net model that was doing image processing or whatever, but you had to build another model to explain what the first model did. And like all these startups did this in 2020. Today, of course, the models that everyone uses, your ChatGPTs, your Claudes of the world, they are language models. And so you can actually just literally ask the model, why did you do that? And it'll tell you. Or as it's actually doing the actions, you can have it output a chain of thought and you can just save that chain of thought down and then like expose it to the user. And so definitely, a big part of using AI in mortgage is going to be making sure it's explained and like the auditors and the owners and, the compliance people can understand, excuse me, why it did what it did. At the same time, a lot of it is like knowing when in the process to use it, right? And so a good example is calculating income. I've seen tons of startups that basically say like, we're going to take the Fannie selling guide and we're going to take the income docs and we're going to dump it all into ChatGPT and it's going to calculate the income. And I'm like, today an underwriter calculates an income with a spreadsheet. A spreadsheet is not like some AI magic. A spreadsheet is just like a set of calculations and rules. So it seems like you should be able to use classical techniques, just basically build a rules engineering calculator and like 50 lines of Python to do the income calculation. On the other hand, like there are things that people are doing that are unstructured. Like the underwriter is reading the pay stubs and typing the numbers from the pay stub into the spreadsheet. The spreadsheet is doing the math, but the human is doing the transcription. And so a very similar analogy would be like, you should let the LLM do the transcription of like reading the document. And then you should let the computer, like the classical LOS tooling, do the math of calculating the income. And so much of it is like, what is better done by a computer in a pre-AI world? And then what do humans have to do? And only using AI for those things humans have to do. Another way to think about it is like AI should be doing the structuring of the data, and then the LOS should be doing the deterministic parts. But it really is about like developing a point of view on which tool you use at which point in the process. And AI is just another tool to achieve kind of that end-to-end automation that we're all going for.
Interesting. What's your favorite of the AI tools, GPT, Claude, Gemini, just in your personal professional life? What are you using the most now?
So personally, I use mostly when I'm like typing, I use ChatGPT, and that's because ChatGPT's personalization and memory is just like worlds above everything. I'm biased also, like the person who runs that team at OpenAI is one of my closest friends. So there's some bias there. But it's also like the different models are good for different things. Like GPT-5 is the smartest model on the market for sure. From a raw intelligence, could it get a PhD? Can it get a gold medal at the IMO? Like all those kinds of things. GPT-5 is far and away the best. But, Claude just released a whole bunch of new stuff at Anthropic. Claude Sonnet 4.5 is probably the best agentic model in that, like, if you want to build an agent, that model was reinforcement learn trained to like do specific things like, manage its own context and summarization, which is like a thing that you used to have to build into the agent, and now the model does natively. It's much better at following instructions. Opus 4.5 is just much better at coding, as far as we can tell, than like everything else on the market. And then Gemini 3 advertises as being much better at computer use. I think it's actually not obvious that it is, but you actually start to see the different labs and models diverging and what they're focused on, what they're specialized in, based on like the use case. And so at Vesta, we kind of use all of them for the various things you want to do. We use, Anthropic for the agents. We use GPT-5 for like answering complex questions about documents, and Gemini for like easier extractions. And so there's also like speed trade-offs and model size and what inference chips they're using. Google's a little faster because they have TPUs. So there's a lot of like holistic things to consider when you're picking which model to use. And it's one of those things, which is why lenders always ask me like, oh, like, can I just build this stuff myself? And I'm like, you can, like, just like you could try to build your own LOS, but there actually is a lot of complexity in understanding the nuances of the models, how to orchestrate them, how to prompt them to some extent, and then building the eval and observability stack. But all the models I would say are good at different things. But I'm a big, like, as like a person sitting on a keyboard talking to a model, I'm ChatGPT all the way, purely for personalization.
Rob, what is that? That's a scientific calculator, Rob. It's you can
It's
use
a good
it
old HP12C, Rich.
with your BlackBerry and your flip phone and your
Rich, I can't even figure out how to get my name on the in Google Meets here. So,
name not available. Our beloved co-host, name not available. So,
yes.
well, Mike, this was great. This was a great conversation, man. I really, really appreciate you coming on. This was a lot of fun. I appreciate you opening the kimono and taking us inside your journey. And it's been a long road, but you guys are in an exciting spot. And yeah, you're one of the companies that I'm really, really watching and pulling for. And we appreciate you coming on today.
Yeah,
Yes, thank you very much.
it was super fun. So it's really great to spend some time.
Love it. And to all of our attendees, thank you so much for spending 45 minutes of your Thursday with us. If you're listening on pod or watching the YouTube, we do the show live. We had a couple hundred people into the live today. So go to chrismancommentary.com to get signed up for the live version of the show. And once again, we want to thank Mike Yu from Vesta, my co-host Rob Chrisman, and all of you for joining us. And have a great rest of the week and weekend, everyone. Take care. Thank you, Deb. Thanks again, Mike. Take care, guys.
Thank you, Mike.